Hello and welcome. You tuned into Market Fatafat with me, Ankita Saxena, and with me is Sharath Dubey. And for the next 1 hour, we'll get you the top buzzers in the trading session today, why they're buzzing, on the back of news flow or on the back of technical charts, all of that and more. But first up, let's take stock of how the market is really shaping us right now. Sharath, another lackluster day coming in, another day where the market is really failing to pick up a direction.
Well, Ankita, you're right. 2 straight days of recovery we saw, be it Tuesday or Wednesday, but today consolidation is there. But mind you, Ankita, today is Nifty weekly expiry as well.
Yes.
And the volatility is there in the markets. Let's have a look at Nifty. That's coming in at roughly 25,200 below. They were giving attempts of recovery twice or thrice. It happened over the last 2 odd hours, but still it's a very small range to actually look at. And of course, there'll be more volatility as we head towards the closing as well. Let's look at Nifty Bank also, where the entire numbers are standing up. And of course, yesterday we saw PSU banks well lifting the Nifty Banker, but today there is a correction happening and it is below the 56,900 levels mark, roughly trading at the day's close low levels. Interestingly, if you look at the HDFC and ICICI names, they are not actually participating in the rally as they concede almost 60% or more in terms of weightage when it comes to the Nifty banking space. Also, let's look at India VIX. That's also a matter of concern. Very low volatility in the market. So that's roughly, you could say, it's coming below the 12 mark as well. But mid-cap and small-cap indices, let's fire the charts. The Nifty Mid-Cap 100 Index and the Nifty Small-Cap 100 Index. If you look at it, over there itself also some momentum was there over the last 2 trading sessions. But today, we see those gains are fizzling as well, be it for Nifty Mid-Cap 100 Index or Nifty Small Cap 100 Index. Also, let's move on. We are joining Ashish Kayal is coming in. He's the founder and CEO at Waves Strategy Advisors. And of course, Ashish, how is the Nifty Bank panning out? Of course, the overall trend still remains positive. Is it a buy on dip strategy market for both Nifty or Nifty Bank, or will you be actually holding up, seeing the volatility in the markets, at least today?
Hi, afternoon to you and all the viewers. If you look at Nifty especially, we can clearly see it has been stuck in a range for quite some time. There is no breakout yet. There is no momentum yet. So I would still use buy on dip strategy as long as price manages to sustain about 25,090 mark. And any dip from here can be used as a buying opportunity for a move back to 25,250, 25,300 levels. So the overall undertone is on the buy side. Bank Nifty looks to be under some pressure more than Nifty today. But Bank Nifty, if you look at the daily time frame chart, has outperformed Nifty, where Nifty is still far away from the lifetime highs. Bank Nifty has managed to, inch very closer to that again. So Bank Nifty outperformance can continue. As of now, there is a range bound lackluster movement, but Bank Nifty has a very important support around 56,600 odd levels. As long as that same level is intact, I think one can expect again a move back to the upper end of the range, which is 57,400. So use dips to buy. Right now, it's a intraday traders market, not a positional traders, but I think that tone should change in the coming week.
All right, here's hoping for that. The tone should change in the coming week, but it's a buy on dip strategy that we've been talking about. But let's get started with all the buzzers that are in focus in today's trading session. And for that, from our research team, they're now joined by Kanishka. And of course, on the technicals, we have Ashish with us. So let's get started with all the stocks. The first candidate is Tech M. Now, of course, Tech Mahindra has come out with its June quarter numbers, where the revenue is seeing a decline of 1.4% sequentially and 1% on a year-on-year basis in constant currency terms, reflecting a continued weakness in the discretionary client spending. Now, its headcount has also declined by 622 sequentially to 79,987 as the company continued workforce optimism amid subdued demand, while utilization slipped to 85% and attrition rose to 12.6%. Now, brokerage notes have also come out. Morgan Stanley is maintaining an underperform and reduced the target price also to 1,555. Now, they feel that the company is effectively delivering on its margin front, but the key positives also include strong deal wins, stability in top clients, and steady movement in the margins. However, significant concerns still remain, such as the weak conversion of deals to revenue, a challenging outlook for verticals like manufacturing, and a weak microeconomic environment. They're maintaining their underperforming rating due to the risk to consensus estimate and premium valuation multiples. So on the back of that, Morgan Stanley is maintaining an underperform rating, and Macquarie is also maintaining an underperform, but they have hiked the target price to 1,110 rupees. Jeffries also maintaining an underperform and have reduced the target price to 1,400. On the back of a weak set of numbers coming in, TechM is in focus.
Thanks, Ankita, for giving a 360-degree view when it comes to the earnings and the broking space. But let's look at what the management has stated, especially on the macro picture front. It still remains hazy, but they are still remaining optimistic when it comes to the IT business opportunities. Let's also listen into what Tech Mahindra's management has to say.
Yeah, so look, like we said on the macro picture is still quite hazy, right? I feel that in certain sectors which have been impacted by tariffs and by demand activity like auto, I think the sentiment is still not conducive to significant discretionary investments. In some other sectors like telecom, for instance, we have seen a stabilization and growth in this quarter, which we expect will continue. For high tech, like we said, we expect a recovery certainly in the second half of the year. BFSI has been more stable. I think we are seeing a lot of traction and activity in our European business, which is also reflected in our numbers and in our APJ businesses. So it's a mixed picture, right? It's a mixed picture across geographies and across industries.
All right, moving on to the next counter, which is Heromoto. Ashish, you picked up Heromoto for us. Today, it's trading with gains of almost 0.5%. But it has been quite range bound. It hasn't done a lot. So what do you see on the charts for Heromoto?
If you look at Heromoto, it has been range bound for quite some time. But if you look at 3 days back, the stock managed to give a very strong breakout on the upside on the daily time frame, and also above the upper daily Bollinger Band, which suggests that there was a contraction, and now we can start seeing an expansion from here on, which is a trend should start moving on the upside. The overall tone is going to be on the buy side, and the two-wheeler segment as a whole, I think, should outperform. We can clearly see that happening from the TVS Motors and few other stocks. So I think Heromoto Corp can also try to catch on the upside. The target for the stock continues to be around 4,700 odd levels. On the downside, the support for the stock is going to be around 4,330. The risk reward looks very appealing at the current levels.
Thanks for that. The risk reward ratio is attractive when it comes to Heromoto. From auto segment, let's move to the metal segment. Aluminium stocks would be in focus, especially Nalco, Hindalco and Vedanta. An important news flow coming in is that Alcoa came out with its June quarterly earnings. Overall, if you look at the earnings, the revenue beat estimates slightly and the EBITDA was also largely in line with estimates. Now 2025, the volume guidance, that there was a change. The aluminium shipment guidance was lowered, and remember, Alcoa is world's 8th largest producer of aluminium. So net, the reaction for the Indian companies was generally positive when it comes to Nalco and Hindalco. Of course, volatility coming in Vedanta as the stock is turned red in the trade. But overall, the momentum is neutral to positive when it comes to Nalco and Hindalco.
All right, so that's Nalco and Hindalco on the back of Alco's quarter 4 earnings. But let's move on to the next counter, which is UPL. Ashish, why have you picked out UPL for us on the charts? I mean, it has picked up good momentum today. In fact, it's up and away almost 3% in trade. What do you see on the charts for UPL?
Yes, if you look at UPL in today's session, there is a very strong momentum that we can see, and the stock has managed to bounce back from its 20 DMA as well. So there is a possibility that we can resume the upside journey in UPL. Overall, we can expect a target on the upside near around 740 levels. And on the downside, today's low, which is around 647, is going to be an important support.
Well, yes, important support levels coming in for UPL, and interestingly, a long build-up has also been recorded. But let's move on to JSW Steel. Kanishka, there has been a broking upgrade, and we could say that there is some news flow coming in from the broking community as well. JSW Steel stock is up almost 1% in the day's trade today. Could you share more details, Kanishka?
That's right. So JSW is in focus today. As you pointed out, Motilal Oswal has come out with a brokerage report with a buy rating on the stock and a target price of 1,180 rupees. This is on basis of a strong long-term outlook and improving margins is what the brokerage is saying. Now, the company plans a 60,000 crore capex over the next 3 years to expand its steel making capacity, improve efficiency, and also secure raw material. So now analysts at MOSL, they are expecting double-digit revenue growth and EBITDA margins to recover to those 18 to 19% levels in FY26 and 27. This would be supported by softening input costs and domestic price recovery is what the analysts have said. Now also JSW Steel is on track to generate 62,000 crore in cash flows, which will fund its 35,000 crore expansion and aid deleveraging, with net debt to EBITDA ratio expected to fall to 1.7. That is by FY27. So on the back of this brokerage report, JSW Steel is in focus, trading about almost 1% higher.
All right, moving on from JSW Steel to the next counter that is in focus, an earnings candidate, that is AngelOne. Now, if you look at the numbers, it has reported a sharp drop of 61% on a year-on-year basis in the net profit, which has come in at 114 crores. That is down from the 292 crores in the same period last year. The revenue also fell 19% on a year-on-year basis to 1,140 crores compared to 1,400 crores in the quarter one of FY25. Now, the operating performance of the EBITDA has dropped 41% to 274 crores, and the margins have also shrunk to 24% from an earlier 33%. Now remember that we do see an impact of the SEBI regulation seen in the F&O segment on AngelOne numbers, and we also have Investec that has come out with a report. They are maintaining a buy, and the target price that they've said is 2,700. Now, according to them, the company's performance was better than what Investec was expecting. The beat in the net profit on their front was primarily driven by lower costs compared to their estimates, and earnings growth is projected to improve on a quarter-on-quarter basis. While the initiatives have shown traction, they currently contribute 3% to the total revenues. On the back of a positive note from Investec, though the numbers were weak, AngelOne is doing good in trade with gains of 0.7%.
Well, yes, recovery was there initially in the trend, then of course a slight sell-off happening in AngelOne. But do remember, this is the first earnings coming in the broking space, and capital market stocks might be under pressure, especially the broking names BSE, CDSL, as we move ahead in the earnings season as well. Apart from this, Glenmark Pharma, we had seen a strong action last week after the AbbVie deal. Stock had jumped up on an intraday basis by more than 10% and strong numbers had come in almost this month. More than 20% returns have come in for Glenmark Pharma, and they had a con call yesterday. And interestingly, in the con call, the most important part of the commentary was that they have actually increased their margin guidance. Now, the consolidated EBITDA margin guidance for FY26 would be 23%. The current numbers which we checked were 18%, and this is coming in after the synergies kick in of the AbbVie deal as well. Interestingly, one more point has been raised, and that company would be considering the IPO for IGI after 3 odd years as well, and the revenue guidance is also a double-digit growth coming in. So Glenmark Pharma, all cylinders firing, and also support coming from broking houses. In the day's trade today itself, the stock had a gap up opening, slight correction, but now it's on its way of recovery. Stock is up almost 0.7% in the day's trade, trading near the levels of 22.20.
All right, that's Glenmark Pharma. That's up and away more than 0.5% in trade. But keeping with the pharma pack, Ashish, you picked up Torrent Pharma. That name is also doing quite well in today's trading session. Tell us, what do you see on the charts for Torrent?
Overall, we can see some green shoot across the pharma space. Glenmark did exceptionally well, and Torrent Pharma also, if you look at the weekly charts and the daily charts, the stock has given a very strong breakout, and we can expect the uptrend to continue. The stock has been correcting for quite some time, since October 2024, and is now managing to give a breakout on the upside. So the overall undertone for Torrent Pharma, both from short to medium term, has turned out on the buy side. We can expect on the upside the targets of around 3,680 levels, and on the downside one can maintain a stop loss for the stock at 3,430 levels.
Well, interesting development coming in for Torrent Pharma, and of course the pharma pack as a whole has seen a bullish move coming in. But let's move on to the metal space. The Hindustan Zinc is in focus. It's a dividend play stock as well, which we know. And important news flow coming in on winning blocks in the state of Rajasthan. Kanisha is here with more details.
That's right. So Hindustan Zinc is in focus after it received a letter of intent from the Ministry of Mines for a major mineral block in Rajasthan, as you pointed out. Now, this letter pertains to the grant of a composite license for the Jhandewali Satipura amalgamated potash and halite block located in the Hanumangarh district. Now, the block spans across 1,841 hectares. This license was awarded following an e-auction process in which Hindustan Zinc emerged as the preferred bidder. And following this announcement, the stock continues to do well, trading about 0.5% higher in today's trade.
All right, so that's Hindustan Zinc. But coming to you on the charts for Varun Beverages, Ashish. Varun Beverage is again a counter that is doing well in today's trading session. In fact, in the last I think since 14th of July, it has started picking up pace. It's up almost more than 8 to 9% since then. Do you see some momentum, Varun Beverages picking up some momentum after a period of consolidation?
Yes, it looks like. See, Varun Beverages is in the downtrend. It showed a very classic ending diagonal pattern as per Elliott wave with a positive divergence we can see on the indicators, which indicated the momentum has reduced from on the downside. And where there is a very sharp reversal that we are seeing on the upside for the stock. So there is a possibility we can see the stock to move towards the level of 550 on the upside. This is where the last swing low has started, last swing fall has started. And on the downside, the support for the stock is going to be around 465.
Right. Also, like we were discussing, Sharad, Varun Beverages, the PepsiCo is going to come out with its outlook for India business, and on the back of that also Varun Beverages is in focus, which is a bottling company for PepsiCo. On the back of that news flow also, Varun Beverage is going to be in focus. But let's move on to the next counter which is in focus, and that is Vipro. That is going to report its quarter 1 numbers, and if you look at what can we expect from the numbers, well, as far as the revenue is concerned in dollar terms, we could see a sequential downtick of 1.1%. In terms of rupee, we can see a downtick of 1.9% coming in on the revenue front. The EBIT is likely to be down 2.5%. The margins are also likely to see a decline of 16 basis points, and the PAT is also likely to see a decline of 9.4%. Now, what are we expecting basically? So we are expecting the BFSI and the healthcare that may act as relative cushions for the otherwise muted outlook. We also see softness in manufacturing, tech and communication segments, and the deal pipeline remains solid. Execution days remain the key risk over here. The key things that we will be watching out for is whether the FY26 guidance is reaffirmed, updates on any updates on the Marelli bankruptcy impact, discretionary spend outlook, headcount, and attrition trends are what we are watching out for Wipro. But before that, the results come out, we are seeing a bit of a selling pressure coming on Wipro. That's trading with cuts of 0.5%.
Well, as Sanketa, we did discuss about the IT space after 2 days of profits coming in the Nifty IT index. Today is a sell-off happening. Of course, Tech Mahindra is triggering that, and we are waiting for Wipro's numbers as well. But headwinds will continue to weigh on the IT sector in the near term, says Shibani Sarkar Kurian of Kotak Mahindra Asset Management. She also shares her earnings outlook. Listen in.
In this quarter, which is the first quarter, our expectations are of mid-single digit earnings growth. But when you look at the full year as a whole, which is FY26, at this point in time, expectations are of improvement of close to double-digit earnings growth for the year as a whole. Where IT is concerned, our view on IT is that yes, there are near-term headwinds, primarily because of uncertainty on discretionary tech spend, where large geographies such as Europe and North America are concerned. So IT at this point in time, in the near term, will possibly see some headwinds, but with a medium-term view, our view on the sector remains fairly constructive. If you look at the overall consumption space, that's in a space which has been a laggard for the last couple of years. Within the segment, our preference has been for the discretionary basket over staples, though of course in staples, there are some segments where valuations are looking relatively attractive, especially when you look at long-term averages.
All right, moving on then, we have Singene International. Also, Ashish, you picked out Singene International for us. Tell us, why have you picked out Singene for us on the charts?
See, Singene, if you look at it, the stock has shown a very strong weekly candle formation. It's one of the biggest candle on the upside that you can see over the past many weeks. And that shows that and it also formed a very clear positive divergence. So that clearly shows that there is a possibility that we can see an upside reversal from here, and we can expect a target on the upside which is near the gap area of around 740 levels. And on the downside, the support for the stock is around 650.
Well, important levels for Singene, but HDFC AMC, the numbers are just out yet, and we were discussing about the stock. All the AMC stocks were buzzing over the last 1 month odd, and a lot of institutional buying was coming in HDFC AMC. The initial numbers, the Q1 numbers, which will be getting flashed in the screen in some time, the net profit numbers that has zoomed up 24% on a year-on-year basis, and the initial fine print says that the AMC numbers has been really strong. And of course, this is a stark contrast if you compare them with the broking house numbers, which the numbers have been weak because of SEBI regulations coming in the F&O segment. But AMC names, HDFC AMC particularly, one of the most expensive stocks in current numbers, is still showing a strong spike in the numbers coming in. So Q1 numbers initially looks strong. We'll be giving you more internal details as and when they come.
Absolutely. In fact, Sharad, look at the spike up that has come in right after they posted their results. So clearly, Street is giving it a thumbs up for HDFC AMC as of now, trading with gains of more than 0.5%. But let's go across to Ashish, who's picked out the Prestige Estate for us. Ashish, tell us what do you see in the charts of Prestige Estate? This counter has done well for itself. From here on, do you see this momentum to continue?
Yes, indeed. If you look at the entire sector, I think that this sector is going to do very well. And Prestige Estate has formed a classic rounding bottom kind of a pattern. It's just giving a breakout of that pattern, and which is a very, very aggressive target. But conservatively, we can still expect the stock to reach towards the previous swing high, which is around 1900 levels. So the overall undertone for Prestige is positive for 1900 levels. On the downside, one can maintain a stop loss for the stock at around 1670.
All right, with that, it's time for us to slip into a short break. Don't go anywhere. After the break, we'll get you more buzzers on the other side. Stay tuned.